Alrighty, what's going on, everyone? Welcome, welcome, welcome. This is the trade breakdown for the beautiful longs that played out this Asia session. Guys, Asia session has just been delivering beautifully day after day after day. I honestly am not sure how much longer this is going to last because the consistency of Asia Sessions delivery has just been absolutely wild. In my years of trading, I personally have never seen it like this before, and I've just been loving the opportunities that's been presenting. And also, like, I was talking about this with some of the individuals in my Discord, but I also think part of the reason why Asia Session feels so easy right now is because think about it. We wake up for New York AM. We spend our time trying to catch a trade during New York AM. We try to analyze price. We try to anticipate what it's going to do next. We try to predict price action. But as we know, New York AM price action has been rather sloppy, choppy, and very, very hard to read. So when we go through 2 to 3 hours of price action in the New York AM and it ends up being really difficult, it's almost like a breather to wait for Asia session and read Asia session's price action. Why? Because Asia session at its core is just a very low volatility but easy to read session. So all of that stress that you would be dealing with during the New York AM is of course not there because Asia session's just easier to read. Now I know I rambled on a little bit, right? Let's just get into breaking down the actual trade. The logic was fairly simple, so it is going to be a bit of a brief look at the actual trade idea. Now on the daily chart, I'll be honest, wasn't really referencing anything. That's because I was referencing the new day opening gap, which we'll take a look at in just a second. But of course, we favor this idea of higher prices. If we take a look at the 1 hour time frame, I have a question. You tell me. What does it look like we are in? Okay. Looks like we are in a market maker buy model. We've had this nice sell side of the curve form, and now we're on the buy side of the curve. Now, I did mention in my trade recap earlier today that this right here was sort of our market maker. Well, this is the sell side of the curve, and this is the buy side of the curve, and this is original consolidation. However, we can always extrapolate market maker models to higher time frames as well. And you can see, what do we have up here, right? We have another form of original consolidation. So this is our sell side of the curve, and now we're forming the buy side of the curve. So I would reasonably expect for like tomorrow and for all of next week to just expand higher. But this is important because this kind of sets an expectation on my end as far as what I'm anticipating for price action. Okay, so I'm anticipating higher prices, or at least I favor the idea of lower prices. And it's always better to get on side of your anticipated or your daily predisposition or your higher time frame predisposition because those are the trades that usually run, right? And they run quick and they do it in a stunning fashion where it's real easy to hold. So here we're looking at the 15-minute chart, and looking at the 15-minute chart really isn't much here that we can outline that is going to be too important. Let's go down to the 5-minute, okay? And on the 5-minute chart, what can we see? Once again, not much price action that is too important. And then let's go down to a 1-minute, which is where all of our analysis is done. Now, this is something that I do want to place emphasis on because one of the individuals in my Discord did bring this to light, and it's something that I just naturally do, but I never really talk about it. And that is when you're trading Asia session, okay, you always want to choose the new day opening gap that's larger. And what do I mean by this? Well, a lot of people only know the new day opening gap as the gap that forms from the 4:59 p.m. closing price and the 6 p.m. opening price, right? That's all people really know it as. Actually, I outlined it completely wrong here. Okay, that's all they know it as is the 4:59 p.m. closing price and the 6 p.m. opening price. But that is the electronic trading hours new day opening gap. There's also a regular trading hours new day opening gap. I go ahead and just draw this out right here, then go back to electronic trading hours. So what I'm doing is I'm toggling regular trading hours, and I am plotting the close of the 4:14 p.m. closing price. And if we go to electronic trading hours, okay, we can drag to the open at 6 p.m. and look what we get. We get a different new day opening gap. This is the regular trading hours new day opening gap. All that really changes is the time points that you're referencing. Okay. Nothing as far as your actual analysis and price action changes. All that changes, like I said, is the levels that you're outlining. Okay. The precision. And sometimes, in fact, majority of the time, that is way more important. And I've talked about this in relation to the daily chart. Remember how I mentioned you always want to be toggling set to see which daily chart has the larger inefficiency. This is sort of the case as well for new day opening gaps. However, something that I do want to throw out there, I do not plot the regular trading hours new day opening gap on my new day opening gap chart. I always reference the 4:59 to 6 p.m. closing price. But when I'm trading that specific Asia session, so for instance, today, if I'm trading today during Asia, which I did, I'm going to reference the larger of the inefficiencies because it's going to give me a clear target. It's going to tell me exactly where price is likely to gravitate towards. And that's super important, especially when you're trading a very lackluster volatility type session like we did today, or like Asia session usually is. Now, in my previous video that I made in regards to Asia session, I taught the Asia session, or the Asia ATM. Okay, the Asia ATM. It's a really simple framework, right? Really, really simple framework, and we see it delivering beautifully today. Okay, it's so fucking easy. Now, I'm not saying that it's easy to, let's say, take winning trades and get payouts, but it's easy to identify the model and take trades in alignment with the model. It takes so much stress off of you as a trader who is trying to analyze these financial markets because it really just removes a lot of the guesswork. Because why? Because it's a consistent framework that happens all the time. So remember, I'm outlining this new day opening gap. What am I using the new day opening gap for? Well, I'm utilizing it as a pertinent level to take note of where price is likely to draw to. Okay. And this is also something pretty big. You can always expect relative equal highs and relative equal lows to form in the direction of new day opening gaps and new week opening gaps. And this right here, this is something that you'll see that happens commonly, where you'll get the engineering of, in this case, relative equal highs and then manipulation away from those relative equal highs. Now think back to, well, for those of you who did watch the 2024 mentorship, right? Think back to the 2024. If not, just think about this in a purely power of three perspective. If you're expecting higher prices, okay, what needs to happen in terms of a power of three formation? If you're expecting higher prices, you're not just expecting straight up higher prices right away. That would be unreasonable. If you're expecting higher prices, you're expecting something like this: accumulation, then manipulation lower, and then distribution higher, right? That's like basic power of three knowledge. Well, if you combine that ideology with what's actually happening in price action, what do we see here? What do we see? Tell me, what is this? Okay, this is accumulation. Now, there are plenty of ways to identify accumulation, but one of the best ways, one of the most powerful ways that ICT teaches it is to take note of where the relative equal highs and relative equal lows form when you're looking at a very time specific session, okay, in regards to the Asia session, right? So in this case, we're referencing the Asia session. So of course, each session has to have somewhat of their own type of power of three. And what do we get? We get clear accumulation. And one of the ways that you can determine that this is accumulation is by what? Is by outlining the fact that there are relative equal highs and relative equal lows being engineered on both sides of the marketplace. Whichever side gets taken first, most likely then the opposing liquidity will be taken or visited eventually. Okay, so we have relative equal highs forming, and this is all accumulation. So if we're already expecting higher prices, if we have a predisposition that we're expecting higher prices. Why do we have a predisposition? Well, we have a predisposition because on the higher time frame, we've determined that we're in a higher time frame market maker buy model. So we're expecting higher prices already. And under that pretense, we can then interpret price action through that lens, meaning that if we're anticipating higher prices, we're expecting a bullish power of three scenario, which suggests that we should accumulate, then manipulate lower, and then distribute higher. And what do we get? We get accumulation, engineering of relative equal highs, we get manipulation lower. All of this movement going lower, I'm not interested in. All I'm waiting to see is when price is going to reverse to do what? To attack the buy side. And take note of where those relative equal highs are engineered. They are engineered in the direction of the current new day opening gap. The current new day opening gap, which mind you, has only seen this portion of price action delivered to with bodies. Okay, because remember at 6 p.m. this is when we open. So really the gap should look something like this, right? So really this is when the gap's being drawn towards or drawn from. So everything to the left, don't even take that into consideration. This is exactly where this new day opening gap forms for the regular trading hours, right? Remember, this is the regular trading hours new day opening gap. The electronic trading hours new day opening gap is defined by the 4:59 p.m. closing price and the 6 p.m. opening price. The regular trading hours new day opening gap is defined by the 4:14 p.m. closing price or the settlement price during regular trading hours and the 6 p.m. opening price during electronic trading hours. And take a look. What has occurred inside of this new day opening gap, this inefficiently delivered price range? What has occurred? We've only done what? We've only been able to lay a body as far as a little bit past the lower quadrant of the new day opening gap of the entire range, which also means what? It also means that there is this much left of remaining price action. Okay, make it nice and orange so you guys see. So this remaining area of price action, it's inefficiently delivered. So we already have a reason in terms of inefficiently delivered price ranges to see us draw higher. And engineered inside of this inefficiently delivered price range happens to be clean relative equal highs. Clean relative equal highs that form during the accumulation phase of a bullish power of three scenario. And we're expecting the bullish power of three scenario because we've analyzed on a 1 hour, 4 hour, 15-minute basis that we're in a higher time frame market maker buy model. And mind you, all of this analysis is excluding the actual Asia ATM model. Okay, the Asia ATM model states this. From 6 p.m. 7 p.m. You mark out the highest high and the lowest low that forms between this range. And you wait for one side to be swept. And once one side is swept, you target the opposing side. Yes, it is that simple. Now, this doesn't mean that you're going to make $1 million in an easy manner. All this model does for you, all this framework does for you, is provide a set of rules that you can follow day in and day out that make it really easy, real stress-free to read price action. So what ends up happening? So bang, 7 p.m. hits. Now we're in the mode where we're looking for a price to sweep out either side of the range. And then price runs lower and sweeps out the sell side. It sweeps out the Asia ATM sell side, the lowest low that forms between 6 p.m. and 7 p.m. Mind you guys, I hope you guys understand I'm doing this on Eastern Standard Time. Okay? So whatever your conversion is for that time, you do it. But sell side swept first, which means what? Just based off of the Asia ATM framework, after we sweep out the lowest low, it states what? That we're bullish to the opposing end of the range. So we're bullish towards the opposing end of the range because the Asia ATM model states that once sell side swept, we target buy side. There also happens to be clean relative equal highs in relation to the Asia ATM buy side. There also happens to be relative equal highs up here to the left as well. We know that we're in a bullish power of three because we're anticipating higher prices on a higher time frame basis due to our conclusion that we are in a higher time frame market maker buy model. So that expectation of a bullish power of three requires that we manipulate lower. And of course, since we're expecting higher prices and we have the Asia ATM framework to work off of, we would be expecting a manipulation into what? Not just any lows, not just any sell side, but into the Asia ATM sell side. You see how I just blended power of three with the framework? So price comes lower, sweeps out the sell side. All I'm looking for is just three signatures to tell me that we are getting ready to reverse. Signature number one, we sweep out the Asia ATM sell side. Yes, that in itself is more than enough for us to feel comfortable about us wanting to see lower prices. Okay? Take a look at what we do right down here. Okay? We stall out right at those lows. We start stalling out, and it's like it does it in such a manner where it just like really slows up, right? It really slows up, and it starts rounding out. You see how it rounds out like that? That right there, that is not random whatsoever. Okay, that is by no means random whatsoever. So what ends up happening? I'm just looking over to my left, just to keep note of any other things that I can add into your guys' understanding. At this point over here as well, you guys cannot see it, but we are trading into the new day opening gap from Wednesday, August 6th, 2026, and we are stalling out perfectly at the upper quadrant of the new day opening gap, which is indicative of higher prices. That's indicative of strength. So we're accumulating in the upper quadrant, and actually, just for the sake of it, I will go ahead and show you what I am talking about here. So if I move to a 1 minute time frame, these same lows right here, take a look at what we're bumping. We're bumping the upper quadrant of the new day opening gap from Wednesday, August 6th. That right there, the slowing up of price action, is indicative of higher prices. Now, remember, that in itself isn't going to get me entirely interested in seeing longs to the buy side, but it's when you pair that understanding with other contextual evidence pieces. Okay, and what are those? Right, I'll literally sit here and rehash everything. We have relative equal highs, relative equal highs. We're in a higher time frame market maker buy model on the 1 hour, 4 hour, 15-minute chart. We understand that we're expecting a bullish power of three scenario, which states that we must have a manipulation going lower into sell side. And because we're using the Asia ATM framework, that means we would expect a manipulation into the Asia ATM sell side, which means that if we sweep out Asia ATM sell side, we're automatic to buy side, and we have the current new day opening gap above, which is still an inefficiently delivered price range. Then we trade lower, we start rounding out, and we don't just start rounding out anywhere, we start rounding out at the upper quadrant of the new day opening gap from Wednesday, August 6th, 2026. And we can't lay a body beneath that upper quadrant level, which is indicative of bullishness. And then that is confirmed when we do what? Price immediately does this. We get a close above these highs. That's a reversal signature number one. Market structure shift, break of structure, whatever you want to classify it as. That is reversal signature number one. We get an overlapping of these down close candles, which is what? This turns into a bullish order block. That's reversal signature number two. These up close candles end up getting destroyed, which is reversal signature number three. Okay, why? Because if we're bearish, up close candles should keep price below it. What happens? We completely trade through it. Bearish suspension block, we trade through it. All of this inefficiently delivered price range, we trade right through it. These highs up here, we trade right through it. We're bullish. I mean, it couldn't get any clearer, and we do it with displacement. I just outlined like 6 different signatures as to why we're bullish, and we already are expecting higher prices due to a plethora of reasons. So price trades lower. Okay, you can see us trading into the volume imbalance. You could have just taken scalps right above these highs and been content with that, targeting any of these inefficiencies, maybe the 5-minute SIBI, which is what I was looking to do. Or you could have waited for this, traded right back down into what? The first order block after a reversal, or you could dub it as a first presented order block after a turtle soup. Look at this nice little dive down we have right into the opening price of the bullish order block. It's these 3 down close candles, which act as one complete order block. Price soups it just by like a couple ticks, and then look at that expansion that we get thereafter. Absolutely fucking beautiful. That's beautiful. That is perfect. And look where it heads towards. It heads towards the ATM buy side. It heads towards these relative equal highs, and it heads towards the inefficiently delivered price range. The fact that we had a culmination, a convergence of like multiple signatures telling us that we were bullish because of a certain area and price action that just made sense for price to reach for, it made for such a high quality idea, which is exactly why Asia session delivered the way it did today. And you could have utilized the framing of the buy side as your bias to target for higher prices. You could have taken profits at the high of the bodies. Of course, that's assuming that you would have held through all of this. That's not for me. But what a wonderful price run. Wonderful price run. And you can partake in these moves right here. And it, as far as I've been seeing it as of recently during summer, it happens almost every day. It's as free as it gets. Now, of course, I don't want to say that and give you guys false confidence because at some point there's going to be a loser day. Okay, there's going to be a losing day. It's not going to be able to deliver consistently every single day like it has been. And whoa, bad voice crack. But it's not going to be able to deliver as consistently as it's been, and that's just okay. But as of right now, it's been on a crazy run, and I don't think anyone should be kicking this to the side. I think people should definitely start paying attention to this, and this is something that I'm definitely going to keep into consideration heading into next year's price action during the summer because Asia session seems to be pretty fucking good. With that being said, um, hopefully you guys did find this one insightful. I was able to qualify for. Ooh, I didn't even realize I had a big ass fucking banner on the screen. Hopefully you guys didn't find that too annoying. It is transparent though, but um so I was able to take a payout today after this morning's New York AM, and then with this trade that was able to qualify me for another payout. So I will not be trading tomorrow. At least real risk. Maybe I'll live stream, maybe I'll paper trade. We'll see. But yeah, guys, other than that, thank you so much for tuning in. Make sure to use code T at checkout. I am running a giveaway with 8 Tradeify Select accounts. If you want to enter, join up the Discord, take a look at the rules in the giveaway channel, and then you can partake. But yeah, guys, like I said, hopefully you enjoyed, and I will see you in the next one. Peace out.